Hello, thank you very much. Good afternoon. Thank you to GS for allowing me to make my intervention. I'm a little bit, I've been jumping between the other room. Obviously, I've just finished the role of the CCO of an airline in Portugal, so I've kind of been on the other side listening to what the airlines have been doing. But then for many years, I was the advisor to the government on tourism development aligned with aviation. And what GS asked me to talk today was a little bit about, as working with the airport side, what is really happening at the moment between airlines and tourism and that link with airport development. So I've used this frame, two sides of the same coin. Obviously, airlines and airports, there is very much synergies. And the synergies go beyond that to tourism boards now as well. The role of a tourism board and the way that tourism boards can incentivize airlines are very important for airports, because obviously the airport is trying to find connectivity and the destination is trying to find those that will come and stay. Obviously, where we are here, there is huge synergies between what is Emirates and what is Dubai and what is Emirates. And if you look at that as a case study, they've proven that a partnership is willing to support the role and development of the airport. So there's this belief that build airports and airlines will arrive. Well, it doesn't work like that. It does not work like that. As representing an airline for 3 years, I had numerous airports that would come and knock on my door and say, please fly, this is what we can give you. Let me tell you, to take an A330, which is a kind of aircraft that you'd be familiar with, to take an A330 off the ground is going to cost you around 100,000 euros. So I better make sure where I put it that it's going to make some value. And if you look at this, obviously the field of dreams, Kevin Costner, and this idea that let's put a baseball field in the middle of nowhere, and by the way, people will arrive. Well, if you look across Europe, where obviously I'm coming from, we have many white elephants. We have many airports that have no flights, because the reason for building those airports were not aligned with what is connection of airlines. Why would I fly there? What does that airport offer me other than the ability to put an aircraft? Where would the passengers go? Do we have the outbound development? So these are very important areas to focus on. How do we build up connectivity? Let's think about, and again, if you've been in the other room during the last parts of the day, we've had a lot of people talk about where our aviation sector is. Generally, if you look at the predictions, everybody's talking positively. There's a belief that aviation is winning. Airlines are doing well. I'm coming from Europe, where we've had 5 bankruptcies in the space of 9 months. And I don't want to say how many more we might have now in 2020. There are serious worries about some of the airlines that are already operating. So what I'm saying is the numbers look good. Where we're coming from has been interesting. But where are we going? I just came back from working on a project in China where one of the benefits of the Chinese is around 8% growth. How do we continue and stimulate that growth? We talked a lot, and again, we saw in the other presentations, as an industry, airlines are doing well. So if you're looking to invest in airports, your client, which is obviously the airline, there is general demand. So that airline is going to say, we have benefits in connecting to your airport. But as I showed, not all airports are offering what airlines are looking for. And maybe that's where tourism can also play a major part in attracting an airline to look at the airport development. Tourism, as I've said and was mentioned in my introduction, 57% of aviation is linked with tourism and flying. So again, from an airport's point of view, don't underestimate the power of the tourist. From an airline's point of view, you won't make money just focusing on tourists. So 57% of the passenger base It's tourism driven, but it's not the tourist that might bring you the yield that will keep that route alive. So the blend between business and tourism is obviously very important. Where tourism can help is particularly in reducing some seasonality, making sure that the airport can operate all year round, and trying to position the link between how connectivity can support the airline and support the destination. We also have, again, some major trends that are of interest to those investing in the airport development. There is this movement to urbanization. There's this movement for connectivity. There is a movement towards the hub model and the importance of global cities connecting to global cities. Some of the research is showing around 70 global cities will dominate aviation traffic. Obviously, those hubs then need to have that focus. The middle class, where is that? It's certainly not in Europe, and it's certainly not in North America. So where people are predicting the next 20 years of aviation development is emerging countries like China, and whether or not that will continue to grow at 8%, 6%. But where do we see the middle class is coming from India. They're talking about 20 to 40 million new middle class families who are looking to travel. And there's a huge need for airlines to understand a little bit more about India. If you look at Indian outbound tourism, Europe, again, if I look at Europe, it's in the hands of Air India. There is no real growth at the moment coming out of India in long-haul European travel. Is that an opportunity? Of course it is. Because if you've got 40 million middle class in the next 20 years that want to experience new destinations, Europe is a huge opportunity, but there's no direct connectivity. And when you look at tourism, direct connectivity is very important. People who want to travel for holiday, where they can, would always try to look for direct services, not so much as wanting to go through hubs. So there's a bit of a contradiction between the global 70 world cities and tourism that needs direct flights. I'll come back onto that. And of course, liberalization. We're talking about opening up the skies. One of the projects I've been looking at is with the China Aviation Authority about how to make it more attractive for the European and international airlines to benefit from China becoming the largest outbound tourism numbers now in the world. If you look at Africa and the open skies policy that the African nations are trying to achieve to allow, if I'm based in Portugal, and as you could probably know, those coming from the African side, we've got quite a lot of historical links between Angola and Mozambique, one on the east side of Africa, one on the west. To fly between those two countries, you have to come back up to Europe. So the reality of opening up skies is a way for airlines to develop and tourism to follow. I'll be a little bit more fast. Obviously, what's important for airports is to understand what's next. One of the benefits that we're seeing at the moment is this movement to a new model, what we call long-haul low-cost. This is bringing new players. We've got 10 new airlines have appeared in the last decade who are focusing on flying between 7 to 11 hours on thin point-to-point routes that allow a new client to go into a new marketplace. Obviously, people like AirAsia. We've had people like Scoot that have come in. We've had Norwegian flying from North America to Europe. These projects have become very interesting for airports because it brings you a new consumer base. You've had the inter-European travel or the intra-country travel, and then you've had long-haul with particular types of airlines, the Star Alliance Group, the One World Group, etc. What these airlines are doing is actually opening up point-to-point secondary cities, two cities that were never connected in the space between 7 and 11 hours. And obviously, because they follow the low-cost model, the prices are quite competitive. So from an airport's point of view, this is a new potential. And you're seeing places like Barcelona, where there was no focus on the longer haul project. It was all based in Madrid. Barcelona has had huge investments from Norwegian and huge investments from Level Airlines, which is part of the British Airways Iberia group. So you're seeing whole new catchments coming into airports because of these new models. The second project, and of course I have to slightly be a little bit about what's happening with the MAX, just using London as the point of reference, there is a whole new project that is also happening. We're moving to what we call the single-aisle aircraft to fly similar secondary routes. So we've now got airlines flying 7 to 9 hours on single-aisle aircraft. A321 long range with around 180 seats. That allows, for instance, where I'm coming from, flights from New York to Porto. New York to Porto was being flown with an A330 twice a week. An A330 has 280 people on board. From the airline's point of view, to increase that flight to 3-4 times a week, it's the cost of 100,000 euros to get the aircraft off the ground. And can I find another 280 people to continue that flight? If I go daily from New York to Porto with this new aircraft, A321 long range, I go from 280 seats to 180. That means I've only got 150 in economy, 30 in business. It's a lot easier to sell 150 seats than it is to sell 250. If I go daily, I actually increase the possibility for people to travel, because 2 flights a week may not fit with the meetings and incentive business. It may not fit with the corporate traveler. And by going daily, and of course, what this aircraft will give you, and I'm sure there are people in the room around this event today, tomorrow, and the third day from the aircraft manufacturers will tell you, I know I by flying an A321 long range on a 5-hour flight from Boston to Portugal, I save nearly 20% operational costs on fuel. So I have less seats, but I have the same demand, and I have 20% less costs. This is a game changer for the airline industry. It allows airports to open themselves to new business models. It will allow airlines to fly routes with higher frequencies and actually maybe try to put some yield back into the marketplace. Obviously, the MAX is the same principle. What Airbus has been doing and what Boeing was looking to still do, it's the same principle. What we've now heard from Airbus is they've now increased this to the X long range, which means we can go up to 11 hours flying, even 12 hours flying on a single aircraft. That puts the world in a completely different way. An airline CCO can't justify flying 12 hours with an A330 on point-to-point secondary cities. You can with the A321 XLR. That, from an airport's point of view, if you're an airport, if you're looking at working with airports in secondary cities, this is game changer. This could be the reason you could stop looking at places like Heathrow, stop looking at places like Paris, Amsterdam. What role is there in hubs if you can move to point A321 long ranges or extra long ranges? Airport development will change according to the game changers of aviation. This, for me, is more important than the previous slide about game-changing with the low-cost long haul. What this does for an airline is probably keep a lot of airlines alive because it changes the project. I'll rush on quickly now, I'm sorry. Obviously, the low costs, just is a little bit of an opportunity. Why so low in Africa? So again, African development, if low-cost projects, open skies policies that I talked about, huge potential. Russia, 5% of traffic in Russia is in the hands of low costs. Huge potential again for new airports to be thought about, working projects differently. Obviously, the UK, Europe, North America. Interestingly, China is only at 57% of its traffic is in the hands of low cost. Southeast Asia is so high because of the strategy of AirAsia and what they've been doing. Just to bring it around, what I highlighted before was the importance of these two new models, the long-haul low-cost, the A321, what we could call the narrow bodies. Look at the amount of projects between 175, with the chairs, 175 to 210 seats. That's what's happening. That's where the manufacturers are. That's where the airlines are putting in their orders. Does your airport have the conditions to support that? Of course, it's a lot more efficient for you to open up your airport to these kind of aircraft than investing in A380 investments. As we now know, it's Emirates who's developing an A380 strategy. Not many other airlines are following. A lot of airlines are getting rid of them. Singapore, it's going. Air France, it's going. So those airports to put double decks and strengthen their runways and their aprons for the A380, you don't need to strengthen anything for the A321 long range. This is a normal aircraft going in. So a huge opportunity for airport investments. But for consolidation and mergers, we don't know. And of course, this is the dilemma on the room on the other side. Can airlines survive, and how are they surviving? Because we are seeing consolidation, or we're seeing bankruptcies. To finalize, we need connectivity. Some research done in the United Kingdom that said if you can get a direct route, indirectly, you get 65 million from regional development. So the link between aviation, tourism, business, the figures prove it. Try to get airlines connected with airports. How you do that? It's quite simple. We need to remove the myths. Why do we have airports in Spain, Portugal, Greece, Italy with no planes? Because they didn't do the maths. Why would you need a flight? What was the link between the airport and working with the airline? You build it, they don't always come. So the reality is, how do we can go down the line of trying to get tourists, trying to bring tourists in. We can go down the line of trying to bring in tour operators, the importance of building, but we've got to build the reason why the airlines will come. Don't underestimate the power of the tourist, the work of the tourism board. We think airlines and airports should be together. Bring in the tourism boards. Three-way partnerships. That's the way that we should be developing the vision for connectivity. How we do that? Incentivize. Don't throw money at airlines. As I said, it's 100,000 euros to take an A330 just off the ground before you've done anything with it. If you're going to invest that kind of money, we're talking about reducing risk by 2-3% in a lot of the incentive schemes that tourism boards give airlines. So don't think, I give money to you, the airline will be okay. You won't be okay. So it's not about throwing money, it's about working together. Airlines need partners. We need the airport to support us, and we need the tourism board to get on side. We can work together, cooperative marketing, campaigns together, visit the destination. As I said, there's no better example. Think Dubai, Emirates. Think Emirates, Dubai. Singapore Airlines for many years did the same thing. Qantas, Australia. Build the brand with the destination. It's the way that you can make that synergy work. And to finally, what I would say is that I don't want to get into technicalities, but from the airport's point of view, diagnostics, determine where we are, and work with the airlines accordingly. What we've got to do is make sure the business cases to the airlines are solid. Airlines need help, and that help is very much around don't put money into the problem, put partnerships into the problem. Let's look at this as a risk. If you, the airline, decide to fly to my airport, what's in it for both of us? And for the tourism board, what's in it for us is the multiplier effect. The tourist stays in the hotel employment, the restaurants, the multiplier effects of tourism is a fantastic barometer that if you think about it, whatever I invest in an airline, I get a lot more back from the tourism spend in the destination. So, and if you think about from a communications point of view, many destinations spend millions on outdoor advertising, millions to say they've got the best beaches, the hottest days of the year. What link is there between advertising and tourism? Zero. It's very hard to measure the impact. If you work with an airline and bring a route into your destination and you can monitor where people are staying, you can actually justify the airline incentive on the benefit for the destination. Tourism boards are learning this and really starting to partner with airlines. And airports, working together, there are great synergies. I will leave you very simple. Don't complicate. As I said, the models are there. One size, no. Each airport, each destination is different. But please, money is not the reason why airlines fly to airports or why airlines, because of tourism. It's a partnership principle that will get us there. Thank you very much. Hopefully I was on time, and I'm around for today and tomorrow if you need to connect. Thank you. Oh, stay on the chair.
Moving on to our next speaker, Ms. Swati Tandon. She is an associate partner with McKinsey. She leads McKinsey aviation and transformation work in the Middle East and has over 15 years in the industry. Prior to joining McKinsey, she was managing portfolio of investments with International Finance Corporation, or IFC. Ladies and gentlemen, Ms. Swati Tandon.
Thank you. Hard to come after you, Gavin. So Gavin has set up a very interesting perspective on what the future of this sector can look like. What I'm going to do to ensure that there is not an overlap is look at what has happened in the past and what can we learn from where the investments have made good returns and where they haven't. So starting from that perspective, it's a page which shows that between 2007 and 14, how has the aviation value chain performed? And the metric that we've used here is economic profit, but you could substitute this metric with other financial profit metrics and the picture will not change. So if we start with the aviation value chain, we see that the manufacturers make a good amount of money. These are your OEMs, which is Airbus and Boeing. The lessors, depending on where you are in the cycle, will either make money or lose money. In this case, they're losing money. The MROs usually make some money, ground handlers the same, catering, the margins start to thin down. But the minute you go to airports, that's when there is a huge depletion in the value chain. And there's actually loss of investment here. The biggest loss of investment, however, comes from the airlines. So collectively, if you add the airports, all the airports in the world, and you add all the airlines in the world, actually, they lose money. It's not a profit-making business. The others, which is GDSs and the travel agents and the freight forwarders, make a little bit of money, but the overall, this value chain, if I take a 10-year view between 2007 and 14, actually lost money. However, what I'm going to do in this presentation is do a deep dive between the airports and the airlines. I will start with the airlines because actually they are the opposite side of the same coin and they feed into each other. From an airline perspective, it's been good news. The value chain is actually making money over the last 2 years, globally. Where this money is coming from, however, if you do a little bit deep dive, is mostly United States of America. And that's because they have seen a massive consolidation. And with consolidation has come pricing discipline, and with pricing discipline has come better investment returns. But the other thing that has happened in the US, which has also driven this return, is the airlines now have a much more closer hub connectivity with their airports. Delta has a hub that it's able to dominate, the same for United, the same for the other airlines. So these airlines have created a synergistic model with their airports that's helping them to differentiate themselves. And this is the consolidation that I was talking about. If we look at the top 5 players in any country and how much of the passenger share do they, in any region, and how much of the passenger share they actually control, we'll see in the US, the top 5 airlines right now are controlling 85% of the total passenger flows. And by the way, while I don't have facts in terms of a slide over here, US is also one of the slower growth markets in the world. So this is an interesting industry where the fast-growing markets are actually competing with each other. More and more airlines are coming in play. Pricing is getting under pressure, and the airlines are losing money. Whereas in regions such as the US, where the demand is a little bit more stable, discipline has kicked in, collaboration with hub airports has kicked in, and actually airlines are making money because of consolidation. However, the fundamental of the industries, we believe, has still not really changed, right? This is an industry where inventory is not perishable. More and more airlines come in. There is cutthroat pricing pressure. There is high volatility in demand. The first thing that gets impacted when the economic slowdown comes is my discretionary spend on tourism. There are factors that are driving the cost up. The most volatile one of this is aviation fuel, but there are other factors also that are driving the cost up. And this is an industry where customers are fickle-minded, and the loyalty is very low. So then, despite all of this, in some tough markets, there's some airlines that are actually winning. There are certain airlines that have consistently given higher returns than the other. And the reason for this is actually fivefold. And I'll start with the bottom and then go to the top one, because that creates the link to the airports. The last one is that the airlines that are making more money, to your point, Gavin, are more disciplined with their fleet. They know where they have to fly, what aircraft they have to use that's going to give them the best kind of profitability. And that is why, yes, there are certain airlines that are no longer choosing to fly the A380 because they're not able to fill up the front and the back cabin that actually makes money for them. They have very strong organizational health, and we can see this in the Middle East itself. Airlines that are successful have a very strong management. These are the airlines that actually, over time, generate consistent returns. They're constantly focused on cost. They're continuously reducing their average cost per seat. Over the years, this industry has reduced cost by almost 150%. And the reason why this is important is because as your main client is constantly reducing cost, if you are an airport, you need to make it efficient for them to operate and cheaper for them to operate. They're starting to own the brand. I mean, we're in the Middle East. There's a very strong Emirates frequent flyer program and loyalty that all of us subscribe to. The airlines that are making money have a very strong customer loyalty. They've differentiated themselves. But most importantly, they fly routes that they dominate, and they have a hub that they dominate. And this is where airports try to start playing a very important role for the airlines to become profitable. And that is why it's actually a partnership. It's not about throwing money at the problem. I really liked what you said. It's about building a partnership and actually having an ecosystem that can allow the airline to differentiate itself and control certain routes that it flies. Now, from that perspective, if we shift gears and we get into the airport, it's actually a pretty complex value chain. And that is what I wanted to spend a little bit of time here, right? The airport is all of this, actually. It has your runways and the capex that you invest in that, but it also has a series of service lines that need to exist for an airport to actually function efficiently. Then there is retail. Airports are becoming more and more like retail centers. And they have to, for them to do well and for them to give the right kind of returns, you need to have this also as an anchor source of revenue. And then I'm not going to go into too much of details, but if we looked at which airports have actually generated more money for investors historically, there has been a big component of real estate developments and actually having aerocities around them. Right? And in that context, what I've done is I've segregated the airports into 4 categories. The first one is your international hub. This is one that we are sitting in, Dubai International Airport, Changi. These are not just the hubs for your hub carrier, but they're just global connecting hubs now because of what they have done. And then there are regional hubs, which are smaller airports, but they actually serve as strong hubs for regional domestic flights. And then you come to some kind of catchment-focused and specialized airports. As an investor, you need to understand where in this value chain do you want to put your funds in, because each of these give different kind of returns and have different kind of things that you need to keep into mind for generation of returns. Now, historically, if I actually skip this and come back to this slide, it tells you that the 30th largest airports in the world have always given good returns to the investors. And that is because they've had a catchment of big airline traffic, which is almost a prerequisite for the airport to make money. They have gone back to this value chain and they have made money on not just the airline, but also on the ground handling services, on catering and cleaning services. They have generated returns through duty-free. So they've had a very diversified revenue stream, which has made them a profitable set of investment. Historically, the smaller airports have actually not given returns to the investors, which is why they have mostly been public-owned. In recent time, however, there's a case example that has come up, which I found very interesting, which is Mexico, where actually investors have been attracted even to smaller airports. And the way the country has done it is that it has created clusters of airport. It has taken one big airport with a lot of catchment value, and it has attached 3-4 smaller airports to that, so that overall the bundle pricing makes sense for investors. And this is interesting to know. If you are looking to invest in different airport assets, you either need to have this model, where your revenues are very diversified, or you need to have this model where a hub airport gives you enough volume for you to generate returns out of that. Finally, I'm just going to say why invest in airports to keep it short. It creates a lot of value for countries, and it creates high impact on GDP if it is done right. This is just a Europe example, but let's look at the percentage of GDP contribution these airports are bringing to these economies. So it is a very relevant investment for countries. As an investor, what are the things that you should think about if you're looking at purely airport investment? Number one, and this is number 1, 2, 3, 4, 5 probably, which is there enough volume? Do I have a hub carrier? Do I have enough LCCs that want to fly here? Am I a tourism destination? Just building an airport is not going to get you enough volume. You need to have anchor volumes in that airport. Is there an anchor airline, and is there scope for enough collaboration with that airline? Very good example, Delhi Airport could not collaborate with Air India because Air India was not expanding. So the airport had to then rely on other airlines. However, let's look at the economy. There are bankruptcies of airlines every now and then. So that airport is making money because of its aerocities, because the operator actually has real estate development as anchor source of revenue. It also has retail as anchor source of revenue because the anchor airline was not sufficient to generate returns there. And then do a pretty clear math on how much capex is required, how much do I need to invest in each side of the value chain, and how much revenue scope am I going to get as an investor? And that math needs to add up. Finally, is there regulatory stability? And I cannot emphasize on this point enough. A lot of airport investments are unsuccessful because despite having an anchor airline, despite having enough volumes, the government changed regulations of how much you can charge as economic charges. And if that is not kept stable, as an investor, you will not generate returns out of airport revenue. I think I'll pause there because it's a very different perspective on pure investment, and open the floor for questions.
Hello, hi. My name is Moash Mawi from ACOM. I heard that you mentioned that the long haul, it is a game changer. So what will happen to the airports which built based on a concept of a transit hub? Like here in Dubai, for example, we plan as more transit than more inbound. So, for example, now we see from New York to Sydney, there is a non-stop trip. So the long haul is more evolving. So what will happen to the model of airports now built on to be transit more than inbound?
I think there are probably two different thoughts on that. The long haul, low cost might actually open new airport development, meaning that the Dubais of the world, the Heathrows of the world, they're full. So the question is, if I want to develop a new project with Level or Scoot, I have to start looking at secondary airports. So Scoot picked Singapore, Athens, Level went to Barcelona. So in that sense, I think the airlines will fight the airlines. So whether or not will that make any difference to the hub, I think it just makes the airlines that use those hubs have to understand the model. How do you compete? How do you compete, for instance, if you've now got, let's take London, if you're going to use Stansted could be a great opportunity for long-haul, low-cost. So Norwegian went to Gatwick, obviously competed directly with British Airways out of Heathrow, who would now go into Stansted and create a model that would put pressure on the British Airways of the world. So I think the first part of your question is, it's not so much, it would not make the airport attractive, it could open up a second airport. The second model I talked about could hurt the hub model. what the A321 or the MAX was looking to do was open up thinner routes. So for instance, look at somewhere like Cleveland, Hamburg. At the moment, to go from Cleveland, Ohio to Hamburg, Germany, I would either go over Frankfurt, I would go over Paris, I would go over Atlanta, I would go over JFK. Now, with an A321 extra long range, that route can happen. So I think the first model, the threat to the airline is that I can attack new projects. The A321, the MAX model, that could put emphasis away from hubs. And the third model I didn't talk about because it's still not yet really in any definition, is what we're looking at with Qantas and their projects now from London to Perth and from London to Sydney. If that model, they haven't said they're going to continue, they are doing the analysis, then the question is, you fly over Dubai, you fly over Singapore, you go direct from two cities. So I think there are three different versions. You've got the low cost will attack the traditional airlines out of hubs at secondary airports around that location. For instance, London, Stansted attacking Heathrow. You've then got the potential of the A321 long range allowing two cities to connect that would normally go over a hub. And then the third project that might not be 2025 later is the new project coming out of what to do with the A350 and how that can go as far as flying 20 hours. So I think all three will impact directly back to your question, but I think the second one at the moment would be, if I was an airport focusing on the hubs, my worry at the moment would be what's the future of this 21 and potentially a new MAX project? How much do I rely on those thinner routes as contribution to the hub?
Yeah, if I can add to that, I think one of the direct impacts of this, if this model takes off, and the jury is still out, because the price competitiveness is so deep in this industry, but one of the direct impacts of this model actually taking up could be that the hub airports and the hub airlines, to survive and capture volume, will have to go even thinner on their margins, because passengers are very fickle. So if the price difference between me flying direct and me spending a little bit more time via connecting grows even bigger, and I'm a leisure tourist and I don't really care, I'm not flying for business, I will still opt for the hub model. But what that will do is it'll put severe price pressure on the hub, both the airline and the airport. The airport can still think of other ways to sort of diversify and generate more revenue, which we are already seeing. The airlines will then also start looking at ancillary, which is a huge, huge thing that all hub carriers are now focusing on, even full service carriers. So that's the second impact. But I would say the jury is still out. Yeah, it is not yet decided which way this industry is going to go.
Thank you very much. It was very interesting for us. Just one question concerning Africa.
Yeah.
In every region, we see that in airlines, we have benefits, but in Africa, no. Actually, every country tries to have his airline company. So I'd like to know what is the problems and what solution for Africa. I noted that we must have unnecessary cooperation between airports and airlines company.
Yeah.
But we still have a very, very big problem, I think, in Africa. What to do? Thank you.
Yeah, I could take that. Actually, very similar behavior on the African side and also on the Asian side. Too many airlines all competing with each other. Very little collaboration between the airline and the hub, except in case of Ethiopian. They've managed to actually generate a privileged network that does give them some kind of benefit. Over time, the expectation is that a lot of these airlines that are government-owned, and again, I can't predict the future, but this is what we're seeing in the industry, is there's going to be some stage of corporatization of these government-owned entities and some part privatization. With that part privatization, the hope is that either certain JVs will get created, or you will see certain consolidation that will reduce the competition in Africa. But again, it comes back to the same problem that I showed you on the very first slide, that the regions that are actually generating investor returns are regions with very low demand growth. United States of America, 2% aviation demand growth, highest return making sector globally, simply because there are not too many airlines that are adding multiple capacity. In case of Africa, I think it's going to be a combination of how the governments control capacity additions to their airlines. Number two, do we see a little bit more privatization that should drive the right behavior of investor return? And number three, there is a huge potential for hub airline collaboration or just simply airport airline collaboration, even for the LCCs. All these three haven't happened yet in the African context, but it has started to shape up. And we are seeing it with a few airlines in the region. It is, however, a very fast-growing aviation market. So not only are the owned national carriers are adding capacity there, almost all hub carriers are also looking on how to pump in capacity into Africa. If I had to put money there, I would say actually the value chain will make more money than the airline. So I expect the MROs, the ground handlers, the caterers, the OEMs in the shorter run to make more investor returns than the actual airlines and the airports until some kind of discipline comes into the industry.
Just to add, I think what shocked me, and I probably should have looked, in October I was involved in a forum in China, and somebody spoke from the China Aviation Authority. There are no direct flights from the three biggest Chinese airlines to Africa. Now, how much traffic do you think goes from China to Africa, particularly on trade? It's unbelievable. And that's a proof that, as was said, the whole project of openness and authorities talking and delegations understanding, I think what I'm seeing, obviously coming from the Portuguese-speaking countries of Africa, Angola, Mozambique, and more recently with Cabo Verde, if you look at the strategy of Cabo Verde, they've rebranded their airline. Icelandair came in and they put a new hub in Sal. Sal is South Atlantic, where they're now connecting Ghana, Nairobi to North America over a hub in the South Atlantic. You could say the same was obviously in a much bigger scale what Ethiopian Airlines have done at Addis Ababa. So you've kind of got two hubs now appearing in Africa, one major hub, Ethiopian Airlines, and one smaller hub, but the focus of 4 continents in the middle of the South Atlantic. And then, as I said in my presentation, I know there's a major project for open skies and liaison between the different regulations to put the vision and make Africa the next hotspot, because, as you say, the projects, I know FastJet, the EasyJet group tried a project that didn't do so well. So don't mirror what happened in Europe. I think, EasyJet, FastJet, let's put FastJet model in Africa, it will work because it worked in Europe. No, completely different business cases. And I think, as you rightly said, is it time for some consolidation amongst some of the airline partners within countries to join forces? But as I said, indirectly, you are getting an Ethiopian hub, and potentially what I'm seeing with the strategy of Cape Verde Airlines to go up to 12, 13 aircraft, there will be Brazil, Europe, North America, connecting Africa over the South Atlantic. So where does that leave Joburg? Where does that leave, for instance, Ghana, etc.? You're right. By default, what is kind of happening is different airlines are jockeying for their positions. Ethiopian and Cape Verde Airlines, massive difference in size, but are not actually competing with each other on any routes. But they're both making a strategy of supporting globalization in and out of Africa.
Yeah, and if I can just add, one point I missed out is also we're looking at a lot of inter-region traffic within Africa. So the jury is still out on who's going to dominate that share. And that's looking more like an LCC attractive model, but nobody has really started to dominate that fully. And that's an attractive place to play in, because that's a more stable point-to-point route play rather than international connect and point-to-point play route.
To fly from Luanda to Maputo, which is about 3 hours flight, it takes you 30 hours.
Yeah.
And that, from the point of view of, that's an opportunity. Just 2 hubs that I know, or 2 major cities within the African-speaking, Portuguese-speaking world of Africa. It's unbelievable that you have to come all the way north to go back south when you can't go east, west, west, east. Yeah. Exactly. Intra-traffic is
a huge opportunity. Yeah.
I just had a quick observation and then perhaps a follow-up question. So you talked a bit about the U.S. market being profitable, but I think a lot of that is based on an older age of fleet, that they're more fully amortized, but something that's never recognized. It's a highly subsidized system. The federal government flows money to all these airports, and this is the bastion of competitiveness and commercial free enterprise. It is the most subsidized system on the planet when it comes to subsidizing airports. Where do you see that evolving, elsewhere in the world? And is there other risks of other countries starting to over-subsidize to try to be competitive?
Yeah. I will have a slightly different point of view to what you said. I think airports alone are not sufficient to subsidize the airline value chain loss, because the airport charges would be maximum 5 to 7% of my total cost as an airline. What has happened in the US, at least from a high-level perspective, is fourfold. One, the airlines have gotten a lot more disciplined about how much capacity are they adding. So there is not a rush of capacity coming in. And of course, the fleet management has been, as you said, absolutely on point, which is the biggest capex that they need to invest in. They're sweating the asset. Number two, which is true, is that the government system of airport ownership has allowed a lot closer collaboration between the airlines and the airports. So the cost has come down, but more importantly, there are clear hubs that have been formed within the US, and the different airlines are not really competing for traffic coming out of that hub, right? So Delta will dominate the routes that are coming out of their hub, and so similarly for United, and so on and so forth. I personally am not seeing a similar trend coming up in other parts of the world. In fact, there are different kinds of trends that are coming up in different parts of the world. For example, India, if we had to pick up, has gone on the privatization journey of the airports a bit too quickly. There is no single hub carrier that has actually dominated the country, which is the fastest growing aviation market in the world right now. And they have gone ahead with airport privatization. What that means is that in the Indian context, the airline that's going to be able to eventually become profitable and dominate internationally will have a very strong domestic network and control costs in other areas and not the airport side. Europe, on the other hand, has two kinds of models coexisting. There are hubs that belong to strong airports, and the governments have largely started to privatize or corporatize them. At the same time, the LCCs are working closely with the airports to create their kind of models. Middle East is very different. I mean, we have one entity owning the airport, airline, and sort of having that collaboration model. I don't see the US model mirroring globally, but I think these different models, the airlines will have to figure out a way for sure to work closely with the airports to create value. That, I think I can be very clear on. Now, where this hasn't happened right now is Asia. If it starts to happen in Asia, I think the impact of that a little bit more globally would be, today, a lot of the traffic that comes into the Middle East is from Asia. If Asian airlines actually create a better collaboration with their hub and actually build a proper hub over there, then how that impacts the traffic within the Middle East is something to watch out for. And that impact could be pretty big, because for now, for all practical purposes, the hub of India for international travel has become the Middle East. This is where majority of the travel comes in. I think that would be my perspective. I know I haven't exactly answered your question, but I don't see the US model replicating itself. What I do see happening is a lot more closer collaboration and different cost elements shaping up in different places.
Yeah, I completely agree with your response, and it's not so much suggesting that there's a risk of replicating the US model, but that it has an impact on the viability of other projects, because there's this false idea that the American market is representative of a competitive environment, and it's not. And it gets used as a benchmark by IATA and the airlines to say, well, airlines are much more profitable, like that chart we saw earlier.
Correct.
It looks like they're more profitable, but when you dig down deep into it, there's a lot of different reasons why they're profitable.
Absolutely.
No,
and not all of it is commercial.
If I could just add, I'll come back to the American point, but interestingly, if the opposite, if I look at the impact on China, I was quite shocked to see China Eastern complain that they are seeing on their intra-China traffic or intra-Asia traffic within 3 to 5 hours suffering badly because of AirAsia. Now, that's not knocking the strategy of AirAsia. What's happening is that the Chinese labor conditions, minimum wage, and cost of aviation is going up.
Yeah.
What AirAsia has been able to do is open up hubs around 2 to 3 hours from China, Indonesia, Malaysia, Singapore, Cambodia, Vietnam, and then flying into China on a low-cost model. China only has one major low-cost airline, only one private low-cost airline called Spring. There is a major project now at the new airport of Beijing to allow China Eastern to develop a new airline called China United. China United will become the low cost of China Eastern because they need to have new conditions with their employees to be able to fight AirAsia. So this has gone the other way. China, people say, have protected their sector, but what's happened around China is those countries haven't, and now they're flooding the Chinese market with cheap seats. So it's a reverse of what you've been saying about America was protecting. China started to protect, but the market around it picked up. And I think coming back to the US, if you look now what Neilman is trying to do with the new project of Moxie, similar to I said about connecting, there's a whole raft of US airline companies that are focusing on the hub model, and he wants to open up third cities. And again, if you look at the product, if I look at Europe coming out of North America, I look at Delta, American, just into Portugal or Spain, we're flying 757s, 20 years old, and then you're competing with TAP with a brand new A330-900, but the market doesn't know TAP, they only know Delta or United. And I see their fleets change. I know the 757s need to go out. The orders are the 21 long range. I think Delta put in for 50. American ordered 75 of these machines. So I think there's a shift in America that the market realizes that they've had it for a long time. Obviously, you know, from this market, there was a lot of pressure when Sixth Freedom was given over Athens and over Milan to connect Emirates. So Emirates has got Sixth Freedom on 2 European capitals into America. America complained that that's anti-competitive, of course. But the customer said, hey, look, I've got this brand spanking 777 A380 coming into the market versus a 757 20 years old. And I think the airlines it's taking them time to reflect on and having to reinvent the product. It's not, the customer will pick the product if they know the product. That's the other challenge. Sorry. But
We have last one question.
Yes. I just want to ask about India. You mentioned India has its challenges.
Yeah.
Why do you think there's 6 airlines or 7 airlines of India is not making money? I think this is a stereotype question everybody asks.
Yeah.
Why such a country with 1.4 billion people have 7 airlines and they're all losing money?
Yeah.
Thank you.
Okay. Well, several reasons for that. I'll try and keep it short. Number one is it's one of the world's lowest yield market. So if you look at the increase in revenue per seat in India, it has been at a very low pace. And that's because, as I said, the government is not regulating the sector at all. And so newer airlines keep coming in, a lot of capacity keep flooding in, so customers have a lot of choice. So as a result, the revenue per seat has not seen an increase at all. In fact, it has seen a very limited increase over the last couple of years. On the other hand, the cost in India has increased pretty rapidly, mainly driven by 2 reasons. India doesn't have a local MRO, so most of the airlines will send their aircraft out to the rest of the world for maintenance overhaul. All of these costs are fixed in US dollar terms, and the rupee to dollar ratio has seen a massive depreciation. So while my revenue has not increased, a certain portion of my cost, which is a pretty reasonably sized portion of my cost, has seen a very rapid increase because rupee has depreciated. At the same time, India has seen a massive increase in fuel cost. So I have basically 30 to 40% of my cost base, which is rising very rapidly, while because of the excessive competition in the market, I'm not seeing the increase in revenue. This is one part of the equation. The other part of the equation is you have a public sector owned airline that continues to exist there and continues to add capacity and continues to lose money, but is also creating creating more and more competition for the private airlines that want to run efficiently, right? So that is also feeding into your inability to increase revenue because Air India exists. And it continues to subsidize sort of the pricing of the ticket while generating heavy amount of losses. And on the third side of the equation, all major hub airports in India have been privatized. So Delhi airport is privatized, Bangalore is privatized, Mumbai is privatized. And each of these airports are now running into capacity constraints. These airports are charging prices to airlines that sort of does not support their economic model. And at the same time, none of these airports are true hubs to Indian airlines. There is no real hub that has been created in India as such. And last, if I can add this, there is a little bit of indiscipline that has existed in the Indian market over the last 2 decades, right? Nobody has actually figured out a model which is actually sustainable, and yet new airlines have come into the country, which feeds back to my first point of we've not been able to increase RASK because we just have had too much capacity in the market. I think those are the big reasons. Now let's think of where the market is growing in the future. IndiGo has managed as an airline in India to create a very privileged position. So while it is true that a lot of their money comes from the sale and lease back and financial arrangements on the aircraft, historically, they have created a network which is pretty powerful. Now, if they were to start expanding internationally and create some sort of a hybrid airline that does low-cost travel within the country, but some form of maybe not full service, but something related to that, they could be a big challenge to the international airlines. I think the jury, again, is still out on how the market is going to evolve. But those are the 4 big reasons why India has not generated enough returns, or in fact has generated negative returns for the last 2 decades now.
I think if I'm not an expert in India, but if I look at the model you mentioned, those airlines don't differentiate from each other. And they all mirrored or tried to understand the European model of what Ryanair and EasyJet did. And the European model is completely different. If you look at Ryanair and EasyJet, when they started, Ryanair developed a project where we called airports what were under the class of C category. These were less than 3 million passenger movements a year. They opened 30 bases in airports with less than 3 million, where those airports were owned by the local government. The taxes that they were given or the benefits of them opening those airports were the multiplier effect. So the model started completely differently. You had military airports that were converted to scheduled airports to fulfill a new project. Then you had all the routes were north-south. As you can imagine, the weather from the UK upwards is where the populations live with the money. They all wanted to go south. The influx of people buying second homes and the whole relevance of low cost was to fuel golf tourism, second home tourism. The amount of people that bought properties in Spain and Portugal because of Ryanair and EasyJet, because I could leave London at 10 o'clock in the morning, at 2 o'clock in the afternoon. I've got temperatures like you have here today in February, March, in Europe, where I don't have in the UK or in Scandinavia. And then the model continued. The way that those airlines, we had laws under the European Union that said you can't fund an airline. No, but you can fund their marketing. So the EU created a law that said you cannot directly give an airline money for incentive, but Ryanair and EasyJet created companies called Ryanair Marketing Services. I, as a tourism board, give money to Ryanair Marketing Services that promotes my destination on their website, which is indirect money to pay the operation. And if you mirror all of that, that's why Ryanair and EasyJet model worked, because they had a vision. If you replicate that in India, and I say I'm not an Indian expert, but from what I'm hearing, the conditions were so different. The only benefit was we want to have low fares. But low fares with higher costs, there's no yield. And I was in the presentation earlier today on the other side. The 5 airlines that went bankrupt in Europe in the last 2 years, Air Berlin, Germania, Thomas Cook, etc., Monarch Airlines, they all went bankrupt for one reason. They worked with tour operators. They wanted to work with tour operators. Tour operators is low yield. Tour operators pay sometimes after the flight. Ryanair and EasyJet, you have to pay immediately. There's no credit to any airline, as an airline to the passenger. So the capital that's coming in, people are buying tickets on EasyJet, Ryanair, 9-10 months before they travel. In some cases, they're a bank, the money they receive. They're not paying the cost. The passenger doesn't fly for 10 months and is buying tickets. You try and buy as a tour operator, you don't pay until 28 days before. So from an airline's point of view, the low-cost model, now if India, I don't know if it's the same principles, if you can take credit with these companies, but these airlines went bankrupt. They went bankrupt with high load factors, but low yields. And that's why the Ryanair and EasyJet model works so well. And let's be honest, these airlines, other than the FastJet project, Ryanair hasn't gone anywhere else. EasyJet's not trying to fly transatlantic like Norwegian, because it realizes, let's stick to what it does. And I think that's probably what India's facing, is too many airlines all doing the same things, basing principles that have come from experts that have dropped in from other continents to say, this is how we should do it.